BloombergQuint.
Hello and welcome. This is the earnings special. We are taking stock of NIIT, which reported a subdued set of numbers in its first quarter, where the profit included a one-time income on account of divestment of NIIT's shareholding in NIIT Technologies. Joining us now to talk about the factors behind the quarter is P. Rajendran, Joint Managing Director and co-founder of the company. Mr. Rajendran, let me start off by talking about your assessment of the quarter. As far as revenues from operations are concerned, they're looking flattish. What is your view of how NIIT has been as far as this quarter goes?
Yeah, as you can see, the revenue is 210.3 crores. Now, as you know, our revenue is built up from basically two large sources. One is the corporate business coming from outside India. Second is the skills and career business, which is India and developing countries and China. So in this quarter, there was a certain sluggishness, mostly because of this a lot of M&A activities happening among the corporate clients of ours, and these are big people. And whenever an M&A happens, there is a little slow down on some of the activities, and it takes a transition time before it catches up again. The contracts are long term, but within that, the revenues tend to fluctuate a bit when such situations happen. So that's where it is. That's where these in the CLG business, corporate learning group business, we have had a small pushback. But going forward, you will find that the CLG business now has about $264 million as visibility of their orders to be burnt over the next 2 to 3 years. And that is about 18% higher than last year, same time. Also, this quarter, we acquired 5 more managed training services, large contracts in US and continent, which takes us to about 40 plus customers for MTS in CLG. Other highlight of the CLG business is 2 years back, we had bagged a contract from the Real Estate Council of Ontario, RECO, and we were to start their first program for training and certification of real estate certified agents in this quarter, and that has kicked off now. This quarter we will start getting registrations, which means the revenues will start towards the end of this quarter, as in when I say this is quarter Q2, and this is for the next 5 years of the order of $68 million US, which will happen. So all these things put together is the visibility for this corporate learning group, which has got a little push in Q1, reflecting in the revenues.
Okay, could you tell us a little more about the exceptional items as well, specifically to do with the gains on disposal of investments in NIIT Technologies?
Yeah, let me tell you that. Because this quarter has been awfully busy quarter for us. So NIIT Technologies investment, which NIIT was holding, that divestment happened, and out of that divestment came 2020.4 crores, and in the board meeting of May, NIIT Limited had set up a special committee to figure out how to reward the shareholders from the proceeds of this. So out of that, after giving a dividend of 5 rupees per share and keeping aside the monies required for taxation, expenses, and for the indemnity pool, and paying this dividend, the balance amount has to be deployed for basically 2 things: rewarding the shareholders as well as growth capital for the future. So in today's board meeting, a decision was taken that 2.68 crore shares at a premium price of 125 rupees, which means today we are around 99 rupees, and these will be at 125 rupees, there will be a buyback. And that's about 16% of the total paid up equity share capital for an aggregate of about 335 crores. So that's a significant decision of the board today.
And what is the outlook going ahead? We have seen certain slackness, and you do suggest that this is largely due to many acquisitions as well as the transition from when NIIT is out of NIIT Technologies. What about the remaining 3 quarters? How do you expect them to pan out?
Yeah, so going forward, I did give you our largest business now is the corporate learning group business. I explained to you how from a large contract, one of the largest which we have had so far, the revenues have started kicking now, and that is going to go for 3 years. We have a $264 million of order book, which is visible for burning for the next 3 years, and these will add up to a comfortable growth as far as the largest business, that is CLG, is concerned. If you look at the skills and career business in of NIIT, good news is that in the go forward business we have grown 15%. And what I mean by growth forward business, like we explained earlier in the previous quarters, is that we are out of the government business and also asset-based business. So and the concentration is on two prongs. One is the stack route business, which is the immersive learning, high end of IT training. And second is the TPAS, which is training as a service. So in TPAS business, in the banking, and also a couple of corporate clients who have signed up with us for hiring and training the fresh recruits into that. So these two are already seeing traction, and we expect these to continue, especially when there is sufficient media news about hiring increasing. And also we find that in the finance and banking business, where we have stakes, we find that the hiring has also gone up.
And my final question then is on operational profitability. What's your assessment when it comes to this quarter, and can we expect significant moves in margins going ahead?
No, so right now, as you can see, the EBITDA percentage is 10.4%, which has gone up 159 basis points from last year, same time. Now, yes, our EBITDA targets are higher than this, but at this point in time, specifically for the 3 quarters, I will not be able to give any specific numbers, but yes, it is moving up, and that is going to be the trend.
Okay, Mr. Rajendran, we'll leave it at that. Thank you so much for joining us and taking the time out. Wish you the best for the future.